Number 4, it also goes into what program is best for you, because your goals are another huge thing that matter to what program's going to be the best. But also, as a first-time home buyer, you have got to sit down and figure out what your goals are. Everybody has different goals. You're going to want to think about, what might I want to spend on the price of a home? Don't say you don't know yet. Don't say it depends on payment yet. I'm telling you. What neighborhood do you want to be in? What area do you want to be in? How much do you hope to spend on the price of a home? Just don't overanalyze that part, just potential sales price. Second piece, what do you want your monthly payment to be? What are you used to paying in rent? Do you want it to go up? Do you want it to go down? Maybe you haven't been renting. What kind of budget have you prepared yourself for the monthly payment? You've got to figure out where you want your monthly payment to fit, like what bracket you want that to be in. What does that number look like? That third piece is, how much money do you want to come up with? Don't label it yet. I don't care if it's a down payment, closing cost, prepaids, doesn't matter. Again, we're not overanalyzing. We're just thinking, how much money do I want to part with to buy a home? Some people it's $1,000, some people it's 10, some people it's 2, and it's every number in between and beyond that you could even think of. What are you prepared to part with to buy a home? Doesn't matter what it is yet. Once you know sales price goal, monthly payment goal, and cash out of pocket goal, your lender can come in there and help you figure out, can you meet all 3 of those? And it's perfect when that happens. It's great. What I like about mortgage lender and what I like about mortgage broker, and I don't like about the bank, is that the bank is FDIC insured. That means that they have some exemptions that the broker and the lender do not. Me, as a loan officer who works for a mortgage lender, or if I was a broker, I have to pass a very difficult test. I have excruciating continuing education every year. And the most important part of that is I have to pass a test that many people cannot pass, or many people at least fail the first go round. It makes me better at my job. It makes your mortgage broker better at their job. The bank, being FDIC insured, the loan officer can be registered, and that's all that they need. They don't have to pass that test. Why do you care about this? Who do you want handling your loan application? The person that didn't pass the test, that doesn't have a ton of experience most likely, or the broker or the lender that probably has a lot more experience, a lot more hands-on, and most importantly has passed a very difficult test to have the knowledge to know what to do, how to do it, and even more important than that, how to protect you as the consumer. Number 5, last but not least, I'm going to cover some tips and some tricks. Number 1, keep a close eye on your credit. The better credit you have, the more options that you have. Pay your bills on time. Make sure to keep your balances low in relation to limits on your revolving accounts. Don't let things go on a collection or charge off, things like that. So keep your credit in good standing. The other thing, please shop for your mortgage before. I wish I had one of those big, like, what's it called? I don't know. Those big things when you're like screaming at people in the sports and stuff, whatever those things are called, whatever that's called. I wish I was holding that right now to say, please shop for your mortgage before you shop for your home. If you wanted to use my tips and tricks and what I talked about in number 1, talking about rule development, and you get to your lender to shop for your mortgage after you're under contract for that house, you might have missed that boat and not be able to go back. So please shop for your mortgage before you shop for your house, because your lender is going to be crucial and so intricate in helping you figure out what your closing costs and prepaids might be. That way you can ask the seller for the right amount of help that you need to make sure that you can buy a home and that you can get a mortgage with no money out of pocket. I bet you're wondering, okay, get to the point then, Stephanie. How do I shop for a rate, or how do I compare interest rates? What you want to do is you want to make sure that if you are calling around for rate quotes, then you want to say, I'm going to give you an example. I am looking for an interest rate quote. I am trying to purchase a home. I'm interested in an FHA or maybe an RD loan. I'm looking for as little money down as possible. I have a credit score between 7 and 725, according to wherever you got that from. I am not interested in paying points, and I am looking for a 30-year fixed loan, not anything adjustable. What might your rate look like today? It's a lot, I know, but you have to do that to get an accurate rate quote. Number 4 is setting yourself up for the best budget. I am a realist, okay? The world is not always perfect and everything doesn't always fit in the great little box. If you want to fit in the great little box, I suggest that your budget, meaning principal, interest, property taxes, home insurance, mortgage insurance, your total monthly payment for your mortgage, and any minimum payments for your loans or credit cards, when you add those up in relation to your income before taxes are taken out, you want that to be 40% or less. So let's use $3,500 a month. That's $1,400. That should be the house note and the car note and whatever else goes into that. That is setting yourself up for the best budget. Number 1, how, when, and where to apply. I prefer that we as consumers, and I even prefer this from the loan officer perspective as well, I think you want to start by applying online. Why is that? That's because you know your numbers and your details and you can put them in. If we're talking to a loan officer by phone, they can accidentally misunderstand your social, the spelling of your name, forget to put junior, things like that. I like when you apply online because you know you're going to spell your name right, you know you're going to get your address right, your social, your birthday, those kind of things. However, it is imperative that after you apply online, the loan officer gets with you and goes through every detail of that loan application with you verbally. It needs to be audited, double-checked, and triple-checked before you even go to the next steps of the process. We don't want underwriting catching mistakes. We want loan officers catching mistakes. We as loan officers want to help you in the beginning and catch those mistakes. So apply online, then you want to have a conversation or consultation with the loan officer to go through the full application. Are you ready to dive in? Because I am. I absolutely love this topic. So the first thing I'm going to touch on today is what is pre-approval versus prequal. I don't like prequal. I don't agree with it. I don't know if other lenders even do it anymore. What a prequal means is you say, hey, this is my income. These are my debts. This is what I want to spend. Do you think that that looks okay? Do you think that's going to work? Here's what my credit score is. Oh my gosh, it gives me anxiety just saying those things because the credit scores that you pull and what the lenders pull, two different things. The way that we calculate your income can vary even just by loan program. So there's no way you're giving us the right income. Your debts. We have to calculate your debts and minimum payments different ways with different things. Like student loans are handled different ways with different programs. If you have like an Amex, that you pay off every month, or 30-day charge accounts, those are handled differently. There's different options with that. So and then plus, people forget all the time debts that they have. Hey, I've got $500 a month in debt, and what does this look like? And then you forgot that you've got a $25 minimum payment card on whatever account, right? And that can make a difference. So prequal is where you just verbally give some information. The lender verbally is like, it seems like it'll work. And that is a prequal. I don't like it. I don't suggest it. I don't like wasting people's time or money or potentially putting them at a disadvantage, which is why I like a pre-approval. So let's talk about that. A pre-approval is when you actually have a full application submitted to a lender. We're allowed to pull and analyze your credit report. We look and analyze your debts, your minimum payments. We calculate your income that you provide based on how we can calculate income with different programs. And then we look at what do you want to spend? Where do you want your monthly payment? Where do you want your cash to close? We kind of put together a little package, if you will. And that makes more sense because we know we're looking at the right minimum payments. We know that we're asking you specifically what your income is. Not you just saying, I make $5,000 a month, but how are you paid? Is it hourly, salary, base, bonus, commission, combination, day rate, right? Mouthful. Yes. We need to know that because each different line item is handled and calculated differently and has different requirements. So part of that pre-approval is that good detailed application where we can look at the credit score, the credit report, the credit history. We can look at your capacity to pay. We can calculate your debt to income accurately. We can look at programs that you might fit into and programs that you might prefer one over the other and actually issue a pre-approval. That is strong and that is going to help you secure an offer better than if you just had a prequal. Mortgage down payment can be, and there are some exceptions to this. I'm going to give you the overall, but you might fall into some of the exceptions. For mortgage down payment, that can be your own money, it can be a gift from a family member, or it can be a combination of both. What do we define as your own money? Checking, savings, stocks, bonds, CD, IRA, 401k. Maybe you have a motorbike, an automobile or something and you sell it and you make money off of that. That would also be your own money. What is not your own money is getting a loan for down payment, not acceptable. What is also not your own money would be trying to pull money off of a credit card. Those are the things that are acceptable for the down payment. Number one, I'm gonna go through 5 different things today. The first thing I'm gonna talk about is closing cost versus prepaid items. Closing cost is, it's not limited to this, okay? But this is an example of the majority of what comprises of closing costs. Closing costs is generally the lender fees, the appraiser, the title company, the clerk of court. Those are closing costs. It seems short and sweet, although that list can very quickly be a large number of items. That is separate from prepaids. Prepaids is your prepaid interest from the day of closing through the first of the next month. It is taxes, insurances for escrow setup. It's also on a purchase. It could be your first year of home insurance, flood insurance, so many months of property taxes, separate from the escrow setup. That is what prepaids consist of. And the final piece of the home buying process, which is amazing and exciting, is actually the closing. The closing is so cool. It's so much fun. It is like, I don't know, it's just like a rewarding experience when you get there and you sit down. It usually takes between an hour and 2 hours, all depending. And you've got your pen, you've got your photo ID, you've got your checks ready, or your check ready, shall I say. And you guys sign everything, commencing that sale, having that closing. And when you're done signing, guess what? You now own a home. How cool is that? I think it is really awesome. And I hope and wish that for you. And I also wish for you that this video has been very helpful in giving you the step-by-step guide of an overview, kind of a bird's eye view of what to expect and how to buy a home. Thank you for watching. If you have not subscribed yet, why not? Go ahead and do it. What's it gonna hurt? Seriously though, subscribe to the channel. Don't forget to hit the bell to be notified. Please do share these videos and the channel with your friends and family to help me spread my mission of mortgage peace. And since you're here with me today and you're visiting anyway, stay a little longer. Check out some of these other videos. I'll drop some links up here.